Hey guys, this is Sean Waller, also known as Sean Your Realtor. Continue to educate yourself because this business is always evolving. Just continue to learn. With it. Talk to you guys later. What's going on, guys? This is Sean Your Realtor. Welcome to the Strictly Free Game Podcast. I'm actually shooting two today. Two podcasts same day, so I have the same outfit on, so don't judge me. It's two podcasts in the same day. Matt laughing at me. I'm here with my guy, Mike Plactere. Did I say it right?
Yep.
Got it right. Here we go. AKA
That Flippin' Accountant on
that
Instagram.
Flippin' Accountant.
Yeah.
I love the hashtag, bro.
Thanks, bro.
The handle's crazy. So I invited Mike on. Is this the first time we met?
Yeah. We met at
We met at the brewery, right?
We met at brewery. Oh, that's right. And
Yeah.
I didn't even know if you knew who I was at the time. But
I remember the face. I can always remember the face.
It's probably Instagram.
Yeah.
You recognized me. But we met there. And were you at Mike's event on Friday?
I didn't make the event on Friday.
Okay.
I actually didn't make the event on Friday.
Yeah, I don't know if I remember seeing you there or not.
Yeah.
But yeah, so we met at Brewery 3, and
Okay.
yeah, the second time we met. But
Yeah, second time we met, but we've been following each other on Instagram.
Yeah.
And I always see your videos now that you put up. I'm like, yo, Mike is always giving free game. I gotta have him on the podcast.
Yeah.
For two different reasons.
Yeah.
One, you're an accountant.
Yes.
Tax season's coming up.
CPA, yeah.
CPA. And you're getting into the flipping business. You get flipping, buy and hold, all that good
Yeah,
stuff.
investing side.
Yeah, so I definitely want some insight on
Definitely.
that. So, first, before I even get into all that, give us a little information on yourself first.
Yeah, so Mike Plactere, CPA. I'm an accountant by day, a real estate investor by night. I'm trying to actually be, real estate investing full time, right? So I'm trying to flip those roles.
Okay.
You know what I mean? But I work at a mid-sized CPA firm on Long Island. It's actually funny. I focus on real estate. Like all my clients are real estate clients. So
Oh, really?
Yeah.
Oh, okay.
Like owner operators. New York City real estate. A lot of like I said, owner operators, high net worth individuals. I do
Nice.
tax and audit, so I focus there. Also do taxes on the side for friends, family, colleagues.
Of course you do. I know they call
Yeah,
it.
you gotta do a little bit on the side, right? So yeah, I've been doing that, and now over the last year or two, I've been trying to get into the investing side. I've always wanted to be investing on the investing side.
Okay.
That's one thing in accounting is actually you look at the one thing that all your high net worth individual clients have in common is they all have real estate investments.
Nice. I saw one of your videos and you mentioned that.
They all do. It's like whether they made it in real estate or they made it in some other business, they got rich somewhere else, but they preserved their wealth in real estate.
Wow.
So it's like the common denominator. So I'm like, all right, I got to get into real estate.
Okay.
So I got to figure out. So I went down, the YouTube channels for years, and
Of course. YouTube University, bro.
that's what it is.
Yeah.
YouTube University. So, and I never took action. I went to the RIAs like in 2018.
Okay.
Met some people, and then it was Charles's event back in I think it was 2020 that I actually it opened up like a whole world of investing that I didn't even know existed.
Okay.
I didn't even know who he was, to be honest with you, until
You didn't know who Charles was?
I know what Charles was until
Wow.
I was sitting at the RIA in February of 2020, right before the pandemic.
Okay.
hit. And there's two guys next to me, and they're watching like a video of this guy. He gets off like an airplane, and he's
Oh, that event.
the promo event.
Yeah.
I'm
Okay.
like, who is this guy?
Yeah.
I checked him out. I'm like, oh. And then I was at the event. I was like, this is like, there's a whole nother layer that I didn't even know existed.
Yeah,
To real estate.
okay.
So.
And now he's everywhere. Like, you probably can't get rid of him off your feet at this point.
Exactly. Like I've been following ever since,
Yeah.
and just networking and stuff like that. And
Nice.
I mean, started. I would say that's when I actually started in investing.
Okay.
Back like when the pandemic hit.
Okay. So I've been watching your videos. I'm a stalker. Like when I'm going to interview someone, I basically stalk them. Almost like a video from like fucking 2019. I was like, he's gonna think I'm a creep. But you mentioned on one of your videos that you went to LIU Post, right?
Yes.
For finance.
Yeah. So that's interesting. So I was actually a finance major. I wanted to be in finance. I always knew because I had someone in the family that was a family friend of ours that was in finance. I was like, oh, I want to do that.
Okay.
So didn't know anything about it, and then 2008 hit. And I was like, pretty smart. I was like, there's no way I'm going to be in finance when I graduate. Like, It was horrible. The economy was horrible.
Yeah.
So I was actually taking my first accounting course that year. And I was actually doing pretty good, like comparatively to like the other business majors that took that introduction course.
Okay.
Like they were struggling. No one understood accounting, but I was like, this isn't that bad. So I just was like, I switched majors right away. And
Okay.
I knew that there would be a demand for an accountant, when I graduated. And yeah, that's sort of what got me into that, and then to the real estate. Like I said, I saw all my clients, in that sphere. So I'm like, I didn't even know you could make money in real estate.
Really?
I had no idea.
What did you know?
Because
Just like buy the house and just live in it for the most part, right?
they don't teach you this stuff. It's not like in like high school. It's not like there's a real estate class, or like in college. At least at my college, there wasn't a real estate class that I could take and learn how to grow your business. I knew there was like realtors. I guess I kind of knew there was you could make money that way, but never on the investing. I don't know. You don't think about these things.
You never think about this stuff.
If you don't know, you don't know.
Man, there's so many things that they didn't teach us early that we should have learned. I probably didn't write my first check till I was in my 30s. Didn't even know how to write it. I didn't even know how to write a check, bro. Who was I writing a check to?
Well, that's true. You had to balance a checkbook. Have you ever done that? Like,
no, I never balanced a checkbook. He just gave me. I just had like a mini heart attack. I'm thinking the tax season. He's like writing. I'm like balance a checkbook. Damn.
No, well, personal finance is actually like a little I've been in bad situations financially when I was in my 20s, and like you learn that stuff too.
Yeah.
Like, so I learned it all self-taught. Self-taught. Like I said, YouTube University, and I'm really into personal finance. So that's a little side thing, that I.
Are you just naturally a numbers guy? Do you just like numbers?
Like I'm not like a creative person like Matt here.
No one's like Matt.
But yeah, naturally I would say, I'm an accountant, so like I'm naturally like a numbers guy. But I learned a lot about credit scores, balancing a checkbook. I always keep my finances and stuff like that every month. Keep track of what I'm spending my money on, what I want to save money for, that kind of stuff. So.
Okay. So speaking of that, because you say you work with a lot of, you work with a lot of realtors. So I'm pretty sure most of your portfolio is like 1099 employed, 1099, whatever. What do you usually come across as far as when it comes to the finances? Because no one teaches you that stuff, especially when you become an independent contractor. Yeah. No one teaches you that you have to put money to the side for taxes. Yeah. That's just like, you learn the hard way. It's like school of hard knocks, basically.
There should have been a class for that, like literally. Like when you saw, even though maybe at your brokerage, maybe in college, I don't know, but there should have been like, if you're self-employed and you're on a 1099, one, you're gonna get banged over the head with taxes because of self-employment taxes, right? You gotta obviously pay income taxes. That's one thing. Yeah. Everyone pays income taxes. When you're self-employed, you got to pay the self-employment tax, which is 15.3%. So at the end of the year, when you file, you're like, your accountant calls you and he goes, you owe like 10 grand. And you're like, I don't have 10 grand. Like, what do you mean? It's like, and it's really his fault. He should have been telling you to be putting money aside. Like every quarter, you're supposed to make quarterly estimates. Yeah. And like, think about what you think you're going to make throughout the year, and then put aside, he'll do a calculation for you and say, all right, put away $2,500 every quarter. By this date, pay it. Like he should have told you that.
I literally just sat with my accountant last week. Yeah. Just to get my estimated everything for the following year.
That's exactly what you did, and you did it the right way. Like a lot of people don't do that.
Do you think people should? When should someone start that process? I started mine because I started doing this whole content thing October last year. Okay. So my mental now is my New Year's always going to start in October. That's the way I'm looking at everything. So I'm starting 2022 in October.
2022.
My quarter one is already started already.
Okay.
So that's why I'm like, let me start get my taxes in order because I know they're coming for me. When is that a normal strategy that someone should have? Like when would you tell your client to start getting their taxes?
Well, now that it's November, I mean, you definitely have to prepare for the year end. So if there's like, there's certain things you could do where you can maybe pay stuff up front if you're going to incur if you made a lot of money in 2021 and you're going to incur a lot of expenses coming up, you might want to front load those now and take the deduction. That's one strategy to reduce your tax bill come April when you file. So that's a strategy you could do. But as far as like, getting ready, that's the one thing you do for year end. There's also, like I said, the estimate. So you might want to do like a mini calculation, sit with your accountant, and he should be able to project what you might owe. Okay. Right. And you want to pay that stuff now because, like I said, they're going to penalize you if you don't pay any estimates throughout the year. Yeah. At the end of the year when you're filing, like I said, you don't want that call from your accountant like, get your checkbook handy. Come to my office with a check. Like, you don't want that. Yeah. So you definitely want to prep for year end now if you can. Okay. And like I said, a lot of the stuff should have been paid in throughout the year, but if not, it's not too late. You can still pay. You can still pay stuff for the year end.
Okay. So. All right, that's some game, bro. So get your. Matt's looking. I see his ears perking up. Matt's 1099 as well, so we're
right.
Getting everything ready for the following year.
Call now.
Let's get into the buy and hold stuff because that's the fun stuff that we want to talk about. We're going to come back to the accountant because that stuff is also needed, especially now.
The strategic things you can do, we'll talk about.
So I'm noticing you're driving around. You're driving for housing at this point. You're driving for dollars.
Oh, you saw that?
Of course, bro. I'm watching everything. Yeah. What's the game plan? What are you up to?
So it's interesting, So like what I was doing about a year ago when I was first starting out is I just got in my car over the weekend when I had free time, and I would just start driving neighborhoods. You know,
Okay.
I'd scope out a neighborhood, Levittown, you know, Bethpage, whatever it may be, maybe Mastic, Shirley, Patchogue, and I would literally drive up every single street, find a property that looked like it was either abandoned or it needed a ton of work.
Okay.
The roof looks like it's caving in, whatever it may be. Like, you know, you see the properties like that. That house is, you know,
Yeah, they need some help,
look
yeah.
at the stuff Charles is doing. You see all those houses are like falling down. So you're like, all right, if I could find a few of those, and if he could find them, I'm sure I could find some too.
Of course, yeah.
So you drive up and down the neighborhoods, you find them, and you find who the owner is. All right, you just skip tracing, whatever it may be. You find out who it is, and I would just handwrite him a letter. Like I would literally just sit down. It was a lot of work, and I was writing hundreds of letters. Like, hey, how you doing? I just saw your property on 123 Main Street. I'm interested in buying it. Please give me a call, and I put my number.
Okay.
And I would do that, and I actually got a bunch of leads from it.
Really?
You know, some were like retail. They're like, oh, I want like 500,000. It's like, there's no roof. Like, what do you mean?
Literally,
like
roof
if
missing.
I was a realtor, like I would, you know, maybe refer that to you, and like
Yeah.
you could put it on the market and sell it. But there was a couple that were like actually investments. We was working on a deal in Bethpage with Charles, and I was telling you earlier that one fell through, but because of the seller.
Not because of
the
Charles.
seller was no, not at all. No,
Yeah,
he'll
no.
tell you the story.
Of course.
The attorney, horrible.
Oh, wow.
It was
Okay.
bad. But anyway, but yeah, that's what I was finding deals, and you know, some of these deals I can't really take on the scope. Like this is a new construction build. You know, I'm a very new investor. I
Yeah.
can't be doing new construction builds. So I called the guy up like Charles and have him do it. You know what I
Okay.
mean? So that's how I was getting started. You know, is finding those deals, and I'm actually going to start it back up again.
Nice,
I'm gonna
nice.
actually find some people like maybe drive for me because I don't have the time.
Yeah, of course.
And it's a good strategy to get deals.
It's a
man.
good, especially if you say you're going away from, you said Levittown, Bethpage, Mastic, like
Yeah.
you're covering all areas.
Well, yeah, I was doing it on two fronts. Like mainly there was like certain markets in Nassau that
Okay.
were hot and I was focusing on. And there was the markets in Suffolk that I'm focusing on for rental purposes. Like those I'm going to keep for myself. I find deals in the Mastic, Shirley, Bellport. That stuff I'd keep and do like the Section 8 model and rent those out. You
Let's
know?
talk about the Section 8 model because I feel like a lot of people run away from those models.
Yeah.
But we were talking off air and I was like, yo, we have to stop and we have to talk about this on camera. Most successful investors will always tell me that's probably the best model to go with because it's guaranteed. But I'll let you give a little detail. Why is that one of the best models to go with?
Well, one, I mean, there's a lot of things. So like first, you got the government is paying majority of the rents. You know, you're not subject to someone not paying you, right?
Right.
So that's one. It's a safer investment. You know, another thing would be is that the people there's a high demand for it. So it's not like you're never going to rent this thing out. And on average, the people that are renting out these properties, because there's such a high demand, there's, I think the average time is like 11 and a half years that they're staying in the property.
Wow.
Yeah, so you can factor in when you're budgeting out your numbers, a lower vacancy factor. Because on the average cash rental, you know, every 2, 3, maybe 4 years, these tenants, the constant turnover. So now it's vacant, you gotta paint, you gotta fix any whatever, you know, issues. So there's a cost to that, you know. So, you know, that you can obviously factor in a significantly low number because of the less of a turnover. Okay. So that's one of the big reasons. The only downside, I mean, Section 8 is going to pay less than a cash rental. You might make more in other markets. But again, I think it's safer just to have it. You just have
a lot of
someone in
people
there for
realize
10
that
more
probably
years.
during the pandemic as well. A lot of landlords probably realized that during the pandemic. Those are probably the only people that are really getting paid was the ones that had those.
Bro, some of these people are getting crushed right now.
Yeah.
You know, a lot of these landlords that no one's paying, especially with the mom and pops. Like the big guys, I'm sure they're fine. But the mom and pops, if you have like 1 or 2 properties and then those people stop paying, I mean, who's going to pay the mortgage? Who's going to pay the bills? Like, and you can't get these people out for 2 years now. And I'm talking to attorneys and they're saying it's going to be at least another 18 months.
They're going to stretch it.
So 4 years and no one paying. I mean, it's crazy.
When people kept telling me, oh, January is going to be up, I'm like, dude, I worked property management for 6 years. That's not how it works in New York, bro. Even if January 1st, they said we can start doing evictions, they're not doing a mass eviction. They're not coming and taking everybody out.
Yeah.
It's going to take you like 2-3 months just to get the sheriff to serve them and
they're
start
going
the
to be
process.
backed up. Even if you get the eviction, the sheriff is backed up.
Yeah.
So what's he going to do? Like, you're not going to jump in the line.
Exactly.
You know, so it's a real issue. But yeah, so I mean.
Well, have you noticed in your portfolio of clients that do have investment properties, do you notice that have a lot of them been struggling? That have like portfolios like that?
Yeah, because a lot of the clients that I work on, at least, you know, my day job, it's Manhattan real estate, New York City real estate. So a lot of them a lot of tenants, there was a lot of lease amendments and a lot of tenants that want lower rent.
Yeah.
Some people just picked up and said, we need either less size because everyone's working from home, or we just got to get out because we're financially, whatever it is. And then on the lower levels is like the retail. So you got your, the restaurants, and they're struggling really bad. So a lot of them either close shop, or they just aren't paying.
Yeah.
So they have
restaurants too.
A lot of because during the pandemic, they really put a lot of restrictions on the restaurants. No one was like they were shut down for months.
Yeah.
So they can't pay their rent if there's no one eating, in the restaurants. So a lot of the buildings were financially, I wouldn't say distressed. They obviously there's always tenants paying, so they were able to pay their bills and everything like that. But it was definitely a bad year.
Yeah.
Let's put it that way.
Wow.
2020 was a bad year for.
It's a bad year,
real estate.
Yeah, but hopefully it'll work out for guys like you that's actually looking for those deals, right?
Yeah, right. Well, if you bought something in Manhattan like in 2020, you're probably doing better now because as the city is sort of opening up, prices are coming up a little more. So
because those prices was dipping.
They dipped a little bit.
Oh man, I wish I had the funds at that point to really go in and grab something because, like you said, those numbers just flying back up.
Yeah, you see some of the big guys that are coming in. You see the transactions, right? So you see some of the more aggressive, risk-taking investors coming in there and buying big properties up.
Yeah.
Some of the people are distressed, so they're taking advantage of that.
Wow. What are some of the things that because everyone's talking about now, everyone wants to be an investor, everyone wants to be a landlord. Yeah. That's the newest thing. Everyone thinks it's easy to do, but you're actually going through the process of training, coaching, and all that good stuff. Yeah. I saw you choose on a coaching call to 1 in the morning last night?
Yeah.
I saw it on his Instagram.
Yeah. That was a network, and that's East Coast RIA. I would highly suggest if you're an investor, you should absolutely get involved in the local RIA. Okay. The one I'm involved with is East Coast RIA. We used to meet in Levittown, and because of COVID, now it's remote. Okay. I actually met my mentor, Carl Chavone. He runs the RIA. Okay. So I've been coaching with Carl for a year, and he's the one that actually got me into the Section 8 model. Nice. Because it makes sense. I mean, everything I told you is kind of what he kind of explained to me, and I didn't even know that was a solid model. But once you get educated, it's a process of education. Of course. That's what it is. It's gonna take, if you're a new investor, this stuff doesn't happen overnight. I've been doing it for over a year, and I'm seeing traction, obviously, but you're not gonna get a rental portfolio. I mean, anything can happen, right? But generally speaking,
it's going to happen. We will speak it to existence. It's going to happen.
It's a lot of work, and you got to be willing to put in a lot of work. And like I said, for me, I'm working, I have a family, I have a lot going on in my life, so it's a lot of work. But it's part of the. If I want to get where I want to go, I got to do it. So
what's the main goal? What's Mike's goal in the next 3-4 years?
My goal actually is to get 5 rentals by the end of next year.
And then 5 rentals, okay.
Yeah. So that was my goal, and I had 2 years to do it, and now a couple deals fell through within the last year. But I'm getting traction and putting in offers and stuff, and my goal is 5 because I want a specific number in cash flows by the end of next year. Okay. And then from there, the ultimate goal is financial freedom. So, and I'm going to do that through rental properties.
Nice. Nice. Okay. So 5 deals by the end of next year. What do you see yourself? What would make you say, all right, I have enough cash flow now, I could just do this completely full time?
How many would I need?
Yeah.
Oh gosh. So my goal initially was get to the 5, and not that I'm going to quit my job and nothing like that, but at some point there's going to be a point maybe where I'm going more part time into accounting and whatever it may be. And doing this full time, So how I do that and how many rental properties, it's going to be a process. So it's not like once I hit 20, then quit. It's going to be, it's a transition process. I'm going to have to maybe pick up more clients on the side and maybe work part time. I haven't really thought that through, and as far as how many rentals it's going to be. But at the 5, I mean, I could certainly. That helps, right?
Yeah, of course. That's
it's a start.
Yeah. My goal was to also start to try to get myself a portfolio as well.
Nice. You're in the game.
I'm in the game. New York market is not the easiest market to really jump into.
Yeah.
But like you said, you're out there. You're doing it way more than what I even thought of doing. I didn't think about getting the mentorship from things. I always say Charles mentioned it, but I've never even put it into perspective for myself. Yeah. But just the market in general, but this is the complaint I hear from friends that want to do it. They're showing the market is too oversaturated.
And yes. Yeah.
Yes and no.
It is. It is.
And they've always like, you know what, we'll go out of town to do it. What is your thought when it comes to that process?
I got to stay. I know people that are in Albany, Binghamton, investing in Florida. You know, they're all over. That's fine, but you're also going to have to buy more properties. You know what I mean?
Okay.
Because here you're going to have higher cash flows, higher purchase prices, everything like that. But down there, to get to a certain net cash flow, let's say you want $5,000 in net cash flow, you could probably do that here with maybe 10 to 15 properties. Okay. Down there, you're going to have to, if each property is making $200 to $300 a month, you do the math on that. You're going to have to just multiply that. You're going to need like 50 properties. So it's really, it's a matter of, it's cheaper in certain markets. The taxes are less. Maybe it's a little less competitive, but this is always, it's a great market. Yeah. Long Island's a great market. There are cash flowing markets, like I was talking about Bellport and Mastic in certain areas that are cash flowing markets. Yeah. And, but yeah, it's super competitive. It's not to say, so when I was saying earlier, like, yeah, it's saturated, it's very difficult, but doesn't mean you can't do it.
Doesn't mean you can't do it, yeah. I mean, like you say, you already started getting some traction with everything, and you just basically started the process like a year and a half ago.
Yeah, it's competitive. You got to find deals and network with people and find opportunities.
Nice. So, to the people that don't understand what cash flow is, right? Because I think a lot of people just have their own perception of what it is. Explain from your perspective, from the CPA perspective, exactly what cash flow would be for someone. Yeah.
So, all right, you buy a property. And now you're renting it out, and let's say you're making $2,400 a month. Section 8, let's just say, is paying $2,400 a month for your 3-bedroom. Then you have all your line item of expenses. You're going to have your taxes. You're going to have your insurance. You're going to have vacancies. See, a lot of people don't factor in a lot of the stuff that you don't pay every month, but you're going to have to pay eventually.
Yep.
Right. There's vacancy. There's capital expenditures. You might buy property that you can rent out tomorrow, but the roof has like 5 years left on it. You got a boiler, there's going to 10 more maybe. And that's going to go out on you. Do you want to be coming out of your personal savings for that? No. So what you do is you want to put away aside a certain number, whatever it may be, there's 100 to 300, whatever it may be, a month, and put that away. And when something happens, you have the reserves in your bank account.
Okay.
There's repairs, and then you have your debt service. So, and a lot of times you're going to have your tenants pay the utilities. It's a single family rental. You just have them pay, the utilities and anything like that. And then you have your debt service. So however you're borrowing your money, whether you're paying, your investors, whether you're paying the bank, that's going to be another line item. And at the end of the day is what you're stuck with, and then you're left with, right? Oh, another thing is property management. So you obviously have to pay. You have to pay a property management fee. What I do is I manage them myself. So I might write myself a check. So I don't consider that really, make or break the deal because I'm paying 7% property management fee. Yeah. It's really going to me. Yeah. You know what I mean? But it's a line item you got to factor in.
Of course.
Some people, once you scale, if you get 20 properties, you can't be doing it yourself.
No, not at all.
Maybe you can, but
yeah, that's tough. It would probably only work if they're all generally in the same area. But if you're spread out, if you're like you said, if you're master, this is Suffolk County, Long Island, and you're in Queens and Brooklyn, and you'll go crazy.
Yeah, a lot of times that's the problem with single family rentals is that you're probably going to be spread out. Not too bad. I mean, you might be mostly in these areas, the Massacs and Shirleys. Sometimes you might get a property in Center Reach or whatever, North Babylon or something like that. So you're going to find opportunities all over. So you are spread out. Whereas if you buy an apartment building, they're all there. Everyone lives under the same roof. So that's the only downside, I would say, to single family investing is that purpose.
Do you believe single family is better? Because I've heard that from different investors. They say they would rather go with the single family model opposed to a multifamily because they feel like there's more people they tend to stay a little longer when it's a single family.
Yeah, because so you have less turnover. Because the people, it's like, oh, it almost feels like it's their house. You don't have to move because you hate the neighbor who's on top of you essentially. So there's downsides to that. Also from a liquidity standpoint, I think it's a lot better to have the single family because, if you wanted to sell off a property or two, I got a lot of equity in this one. Let's sell this one off.
It's easy to get.
Yeah. If you have a portfolio, but with the apartment buildings, you have to sell the whole thing.
Yeah.
You can't really sell off.
You can't sell the second floor.
Right. All right, second floor, you're paying rent to that guy now.
Oh man, what are some of the biggest issues I don't want to say issues, but like I said, we're going to go back to the accounting part of it because that's the part I'm really locked into right now because, like I said, tax season is coming up. Yeah. What are some of the biggest downfalls that you see when it comes to 1099?
Pretty much, not paying your estimated taxes.
Yeah.
A lot of accountants just do your taxes. They don't really spend time to plan out a solid structure of things to do to like, for example, retirement is a great thing. You want to put money into an IRA. You want to put money away for, maybe you sit with a guy like Lou Soriano.
I just sat with Lou Soriano.
Uncle Lou, he's the best.
Yeah, I literally just, you see,
oh, yeah.
you always hustle on Lou.
Okay.
Actually, my wife and I just sat with Lou last week.
Okay.
Because we're trying to structure, I got 2 girls now.
Yes.
So I want everything to be structured. I want my kids to be trust fund babies. I'm trying to put them in the best situation that they could possibly be in. So we sat down with Lou, and Lou was giving us some great insight on everything. He's the one that told me to go back to my accountant and start getting everything rolling as far as the self-employment taxes, as far as the prepaying my taxes going forward. It's just Uncle Lou gave me, shout out to Lou, gave me a lot of great insight with everything. Not to cut you off, but now, so go back to what you were saying. So you were saying paying, I totally
yeah, no, there's, all right, so the retirement. Sit with the guy like Lou, or sit with Lou, and then, he's going to manage the investments, but you're going to put it into an IRA. You got a deduction for that, so that you could lower the amount of tax you owe for that. There's HSA plans, if you're in a 1099, maybe you pay your own health insurance and, all your medical bills and stuff. So you can do that in an HSA account, which is a health savings account, which is a pre-tax account. Again, lowers your tax, the amount of tax you owe. But the big one for realtors is the S corp. A lot of people don't know about this, which is crazy to me. It makes so much sense. So the way you know this, but the way it works in the 1099 world is you have to report everything on a Schedule C. And that net number, right, which is your income less all your business expenses, that net number is subject to self-employment taxes. So now, like I was saying, the 15.3% you got to pay tax on. Yeah. Now, because you're self-employed. If you're an employee, obviously your employer is paying that portion for you, so you don't have to. You're not worried about it. So the way to do this is if you're making, it's all maybe 60,000. If you're making over 60K, it maybe makes sense to do the strategy. Otherwise, you don't have to do it. But once you make over a certain amount net, you want to convert to an S corp and get paid through there. And what you're going to do is pay yourself you're an employee of your business now, right? So you're going to pay yourself a salary, a reasonable salary, 40, 50 grand, whatever it may be, whatever is considered reasonable. Yeah. You're going to pay the self-employment on that, but anything else is just a distribution out of the business. Okay. So if you make 100 and you're paying yourself 50, you're only paying the self-employment tax on the 50. But the other 50, you could take that out of your business and you're not subject to the self-employment taxes. Okay. Because it's just a draw from the business.
I actually just learned a lot about that too. I mean, I knew some of it, but when I sat with my accountant, I was with her for 3 hours. And she was break everything down with me. Because I know a lot of guys that got jammed up, they just weren't paying taxes. Or they would just write off everything for years. And when it's time to, if they want to purchase something, if they want to get an investment property, they can't really get anything because they're not showing any income.
Yeah.
You know what I mean? That's what happened to me last year when I was you know what, maybe I'll jump into the game. But, everything was slowing down a little bit. And I'm like, I'm not even showing any income.
That's funny. I had someone call me the other week. They're like, my client needs, someone, an accountant to sign off on a 1090, on a profit and loss, like a P&L.
A P&L, yeah.
So they're like a 1099 employee, self-employed, but they didn't keep any records. They want me to just oh yeah, I made 60 grand and I had no expenses. Right? Yeah. Okay, 60 grand, sign off. I'm not gonna do that. Thank you, but if you have anything to substantiate the income and the expenses, then fine. But I'll do that service for you. But I'm not just gonna do something.
Not gonna rubber stamp.
Listen, is there any risk to it? Probably not. I was talking to my mortgage guy. He's like, it just sits in a drawer, but I'm not gonna. That's fraud. I'm not gonna commit fraud.
Yeah, my luck, that shit to get audited and somebody.
Yeah, someone will find out. Yeah, you signed off here. So what documents to prove that? I'm like, he told me on the phone. No, that's not gonna fly with anyone.
When do you think is the? Because I have a really good friend of mine that has a trucking business. He owns 20 trucks, and I remember at one point because he gave me he said there's always levels to accounting, right? He gave me an entry level accountant. Mm-hmm. And after a while, when he started seeing I was making money, he's like, all right, now it's time to graduate, bro. You gotta step it up now. They're cool, but now you need a real accountant that's gonna look through everything and tell you really how to structure your business. Not your business, but your taxes are your business in a way.
100%.
So when do you think, at what threshold should someone start to really like elevate?
Well, yeah, like, so if you just have like a W-2, you're an employee, like there's like the basic level, you go to H&R Block, you got the guy who works out of like a hotel room, and he's
my guy,
banging
that
out,
was
like,
my first guy.
he's doing like 10,000 returns, and he's just, you know, from like sunrise to like all night, right? So like, there's that guy, you know, and they don't care, like they're gone. You don't want to work out of a guy of a hotel room, because who do you call when the IRS is knocking at your door? Like, he's in Jamaica somewhere, like on the beach, you know what I mean? So yeah, you don't want to go with something like that. But, but either way, like, so there's like your basic accountant who's just going to do your return very fast, because you're very simple. You just like, you're an employee and maybe your rent, so you don't have any deductions. It's very simple to do that.
Okay.
But then, yeah, once you're self-employed, there's a lot of strategies you can employ into your business, and especially like year-end stuff, like we talked about a couple with the retirement and the S-corp strategy. And you want to get with an accountant who's actually going to sit with you and plan with you, maybe sit with you on a quarterly basis or something like that, and go over your situation, how you're doing, and what you got to do as you approach the year end.
Yeah.
And in the future, like, you want someone to plan for your future, not someone who's just going to say, okay, you made this amount of money, here's your tax bill, see you later.
Yeah. So you should meet with your accountant more than once a year then.
Yeah, you know, maybe not if you're like an employee, but like, yeah, if you're any kind of 1099, absolutely, you should definitely be planning with, you know, an accountant like that on a quarterly, maybe twice a year or something like that. Or, but yeah, you don't want to just show up at the end of the year not prepared, because, like I said, he's going to say, okay, this is your tax bill. Yeah. See you later. Now you owe money to the IRS, and my fee's this. You know what I mean? See you later. Next, like, you don't want something like that.
But when it comes to, see, I was W-2 and 1099 for years.
Okay.
Last year was my first year full-time real estate.
Okay.
But I had a W-2. So my taxes would always kind of work out for me, because it would kind of like absorb those taxes from the 1099.
Yeah, you had like a refund.
Exactly.
Cut you off, so.
And my wife never could understand it, because he used to eat up everything. But someone that's trying to start a business now, I give my wife for example. She's trying to start her own crafting thing now. Okay. I'm telling her, listen, get the S corp or get the LLC, whatever you want to set up, because that's going to help you in the long run.
Yeah, yes and no. I mean, I did that too, and now that I'm looking back at it, it's really, you know, you're going to file on a Schedule C anyway. Okay. So like, people say, oh, do I need an LLC? You do eventually. You know, at some point you might want to do that. Okay. You know, but before you're really making good money and stuff like that, really just, you're going to file everything on the self-employed, and like I said, if you're not making a significant amount of money, it doesn't make sense to pay me or someone else to file an annual S-corp return. Okay. So you want to make sure like you're more established to do that. But it's, yeah, and it might be just like a waste of money, because there's no risk. You know what I mean? Like, if you're just starting out a business on the side, what is your actual risk? Is there like a risk that you're going to get sued? Like, that's the whole reason to get an LLC, is for asset protection. Yeah. Because now if you have your entity in the LLC, only the assets of the LLC are subject to maybe if any sort of lawsuit or whatever. But if, you know what I mean? Like, if you have your personal assets, they're not subject to that, because the LLC gives you that protection. So there's benefits to the LLC. You want to do the LLC, but, you know, in the very beginning, before you're even making a nickel, I mean, you know, just. So
when do you think someone should start?
Yeah, at some point, I don't know like what the number is, but as you're making, you know, tens of thousands now, you're like, all right, this is more of a business than it was like a side project. Yeah, at some point, you definitely want to sit with the proper, you know, whether it's your accountant or maybe like I had my attorney set up my LLC for me. Okay. All right. So yeah, like someone who's, yeah, it's definitely good to have the LLC, but, you know, is that the first thing you should do? Maybe focus on, you know, getting the business going, you know, number one. Because a lot of people, they focus so much on what's the proper way to do this. It's like, the proper way to do it is go make some money.
You make some money for it, yeah. It took me a while. I didn't have my LLC until like years after. Yeah, years into the business. Not by design, like I really didn't know any better, but after a while, my accountant, she saw the money that I was starting to make, she was like, now it's time to get that LLC or that S corp or whatever, you know.
That was probably the right way to do it, I think. You know what I mean? Like, once you're making some money, just get it done.
Okay. You know? All right. So what's next, bro? What you got going? What's the move for Mike?
Just keep doing what I'm doing. You know, try to grow my tax practice on the side. Okay. And you know, the real estate business. That's my main focus. Is, whenever I'm not working and not with the family, just work on the business, whether it's early in the morning, weekends, whatever it may be. Just continue to get out there and try to find deals. That's my and rental properties. Rentals, baby. That's the goal.
Are you working with a lot of agents, or are you networking with agents to see if they can get you some off-market deals as well?
Yeah. Okay. I'm working. I do agents probably that are watching this probably hate me, but I send I do some text marketing stuff where I'm sending out a video to them, and they're like, "Who is this guy?" And then I try to network with them that way, as well as meeting people in person, what we're doing here, and just try to grow my social media, because I think that's the best networking. In my
I was going to
opinion.
ask you about that too,
bro. It is. I was never hey, let's post a video. I hated it.
Yeah.
I still am camera shy, but maybe it was bronze event, whatever it was, I was networking people a little bit on social media, and then I saw them in person. It was we're brothers, what I mean? I never met the people, So there was something that struck a chord during that event, and I was like, oh, there's real power here, you know what I mean? To really grow your network and meet new people.
Because if they start to see your face, they start to trust you a little bit more.
Every day they see you.
They see it and they're like, yo, let me throw Mike this deal. I know the perfect person to do it. You know what I mean?
Yeah, they see you, and I've actually gotten opportunities. People go to me through Instagram and they go, oh, I got a rental, I'm selling it. Give me your offer. Let me see what you got. Maybe we'll sell it to you.
Okay.
Completely off market.
Yeah.
And I never would have gotten that opportunity if I was just sitting on my couch, not out there. With the social media. So it's been a game changer. Okay. And I'm a big believer of it.
No. So you're going to try to do some more social media marketing in general?
I think so, and I got some plans. I'm gonna do some videos and stuff. Man, at some point, I'd love to work with Matt, our visual.
He's right here.
He's
creeping. I see him creeping back and forth.
I'm not joking.
I can tell when Mike is on a prowl. He's like, I'm joking. Now Matt he's definitely one of the best ones to work with.
From what I've seen, he's great.
I can tell. I'm a testament to that. Like you said, camera shy, bro. I did not do anything on camera prior to meeting this guy.
Really?
Yeah.
Okay. And that's what I want to. In addition, I want to do a podcast. I don't know if it's going to be like this, or maybe it's just me and my computer desk in the beginning. I don't know how I'm going to do it. I don't know if I have a name for the podcast. I haven't really thought it through, but I think that's another great opportunity to meet people as well that you just never would have known.
The podcast is great, especially if you're doing it online, like you just said, because you could go to other states. You could get someone that's in a different market and start the conversation from there. Yeah. I started mine on Zoom too.
Yeah, listen, if you want to meet the top realtor in let's say Patchogue, I don't know who that is, but if you just call them up and, hey, you want to go on my podcast? You want to sort of I can show you my network and your network, and sort of you know what I mean, I open up my network to you, sort of thing. And that's people would be like, oh sure, I'll come on your podcast.
Of course,
there's a lot of power to that as far from a networking perspective to meet new people. So I'm thinking about it from that end.
Do it, man.
I don't care if the quality's probably gonna be horrible. I don't care.
Everyone has to start from somewhere, bro.
Yeah, exactly.
You always have to start from somewhere.
Yeah.
Give them a little information how they can get in contact with you, bro.
Yeah, my cell phone's 516-662-6132. That Flippin' Accountant on Instagram. So at that Flippin' Accountant. You just type it in, that Flippin' Accountant. It'll come right up. So.
Dope. You want to leave with anything else? Any free game that you want to give out there to anyone that's with tax season coming up? What they should be doing, even if it's W-2. Well, W-2 is usually a little easier, right?
Yeah, from that perspective, it's simply just, usually you have everything paid in, and you're just going to file and get a refund back. That's what most people do. Yeah. But as far as, if you're any business owner, small business owner, 1099 employee, meet with your accountant, sit with them now, because we're approaching the holidays and stuff, and you just want to get everything in order. And
that was the best time to do it. Everything's kind of slowing down. Everyone has pretty much a little bit of extra time on their hands.
That's what it is. October 15th is a big deadline for accountants. So we're very busy most of the year. October 15th, things start to slow down a little bit. Okay. November, it's very slow. December, it's slow. Call them up and get a solid plan in order and start taking action to help you in tax time. Let's
talk retirement before you leave. Because I'm still on the fence. I'm thinking SEP, solo, 401k, right? Which is usually the best one for anyone that's going to 1099?
I think the SEP is really good. I got to look at all the restrictions and stuff with the SEP. I think that's usually a really good one because there's no, certain ones have limits, right? You can only put X amount aside. And if you crushed it last year, you might want to put 25%. I think it's like 25% for the SEP.
I think that's what I read too.
Something like that. I gotta look at the specifics on that. But, but yeah, usually that's probably the best one for small business owners.
Okay.
Self-employed.
I do have another question for you.
Yeah.
Before we even leave, what's your so this whole $600 issue that's coming up, right? The whole $600 that's going to be taxable, not taxable, but what just came out with this whole $600?
They changed it. Didn't they change? I think they changed. They didn't pass anything.
They didn't pass anything yet?
No, nothing yet. It was circulated in. Oh, that's what it was. So it was circulated in a bill that was passed, I think, in the House, that they were going to report everything over $600.
Okay.
Like every transaction, which is crazy. That's like
nuts.
That's like every transaction.
Yeah, exactly.
With inflation, that's like you buy a pack of gum and you got to report it. But so there's that. But like they changed it to 10,000, I believe, and that bill is not passed yet. So
they changed it to 10,000.
Yeah, they got a lot of pushback because it was like ridiculous.
$600. I'm like, damn. Like
it's crazy. It's crazy.
You can't do anything.
Well, currently, like if you make $600, you're supposed to report a 1099.
I didn't know that. Are you?
Yeah, like technically the current rule is like if I'm, I did some service for a company or whatever, like if Matt Art Visual paid me whatever to sweep the floors or something like that, and it was over $600 for the whole year, I got to report. He's supposed to issue a 1099 because if you're a corporation, it's different. You don't have to. There's no 1099 reporting that applies to you. But if you're like an individual person or anything like that, you're supposed to get a 1099.
Wow, I didn't know that.
They're supposed to report it.
You knew that? Oh, you didn't tell me that. I've been sweeping the floors for 2 years, bro.
There you go. You gotta call your accountant.
I gotta call my accountant, bro. Oh man. 1031 exchange.
Oh yeah. I'm about to shoot a video on that.
Are you?
Yeah.
You gotta give me something, bro. You gotta give me a little drop a little knowledge from me. Give me some bars on that.
Okay, so 1031 exchange, for those who don't know, it's when you exchange a property, you sell a property, and you exchange it for another like kind. It's called a like kind exchange. Like it only applies to real estate. So you could sell a house, you could buy with that sold. You sell the house, you could buy like an apartment building. You could buy another house. You could buy. It has to be real estate. You could buy land. So what happens is you have a huge gain when you sell that investment property. So what happens is you can defer the gain if you do a like-kind exchange, as long as you don't touch the money. So you need a qualified intermediary to handle the transaction. Okay. So if you sell the property within, I think it's 45 days, you have to identify another property. And then within 180 days, which is 6 months, you got to close on it. Okay. Right? So when you sell it, the money has to go to a qualified intermediary. You can't touch a dime. If you do, it's subject to the gain. Otherwise, you can then defer that gain in perpetuity when you complete the 1031. So the benefit is why would I want to do that, right? A lot of people say, well, why would I want to defer the gain? I'm just going to have to pay it later. Yeah. But the thing is, if you keep doing it, or if you just don't touch it at all, and you just keep deferring it forever, and when you die, your heirs take on the property at a stepped up basis. So what that means is, let's say you buy a property, you have no basis in it because you've depreciated it over the years, right? And you essentially have a basis of like $100,000 because that's what the land's worth, right? Yeah. But you've sold it and you kept exchanging up, and now you got a property worth $5 million. Yeah. Right. So if you die with that 1031, it goes away, and your heirs take on the stepped up basis, which is the fair market value at the date of death. So that's a benefit there, is that you kind of avoid all those capital gains
for your life.
Yeah, like I avoided it because I'm dead. Yeah,
you gotta worry about that.
you take it on, but they get the benefit of not taking on with that debt or that with that capital gain tax that they would have owed, because they're getting it at a higher basis. Right, like I was saying, the basis is down here. It's worth here. You die, they get rid of that basis. Now you get this basis up here, the fair market value. If that makes any sense.
Makes plenty of sense.
Yeah.
So what happens if you have a trust set up? Does that if that property is in a trust?
It all goes into an estate.
An estate, yeah.
In your estate when you die anyway. Yeah. So that they're going to inherit the estate. So then they still get the stepped up basis. Yeah. It doesn't go away.
It's good to know.
So yeah.
So that mini mansion you got, bro.
Well, on a house, if it's your personal, so it's got to be for business or investment purposes. Okay. So if it's your personal residence, that's different. But when you sell your house, you get an exclusion. up to $250,000 if you're single.
Single, right?
$500,000 if you're married. So you can live in your house, like I said, live in it, and you bought it for $150 back in the '90s. Now it's worth $700,000. Well, I guess you would only get $500,000 of that would be excluded from the capital gains.
Nice.
So that's a separate thing, but yeah.
So it's always great to buy real estate.
Oh, it's always great. No, they literally like built the code so it's like it favors the real estate market because at the end of the day, that's what runs the economy. Is that the real estate's a huge it's for the economy. There's a lot there, right?
Yeah.
So they try to stimulate the economy through the tax code, and they did a lot for real estate investors and in real estate in general, just to get the economy going and keep it. And here we are today. Now they're trying to get rid of the 1031.
Now they're trying to get. That's why. So let me ask that. I hope that doesn't pass because that's going to affect a lot of people.
Yeah, I don't know if they're going to do it. I would think the real estate industry is just they're going to fight it. The lobbyists are going to fight it, and I don't know if it'll actually go anywhere. But that's the proposed idea right now.
Okay.
Which is crazy. Like I don't know what you do. Like what about the people that 1031 their whole life? Does that go? Do they now are subject to no 1031? Like, like what happens? Like they don't know.
Yeah.
No one knows. It's crazy.
It's crazy. There's so many different cheat codes when it comes to taxes that I feel like if you understand the language and what you could do, you could pretty much skate for a while.
Yeah.
Even when it comes to purchasing a vehicle, like I think I learned this maybe like 2 years ago. Anything that's over like 6,000 pounds or something like that by the end of the year, if you purchase something over 6,000 pounds.
Yeah, you consider like that's more like business, like a truck or something like that.
Yeah.
I think under 600 pounds is like your normal car, but that's really for the vehicle deduction. And what I do is I just normally take the standard mileage rate as opposed to the actual expenses.
Okay.
So sometimes it's usually beneficial to take that rate. So at the end of the year, you'll tell your accountant, hey, listen, I drove 10,000 miles, all business purposes, all for business. So he'll take that number and he'll get the deduction. I think it's 56 cents for every mile.
Okay.
I think for the last, for 2021, changes every year. And then you get that deduction on your taxes. So
nice.
That's the way I normally do it. Otherwise, it's very convoluted, and there's a lot of work really to do the actual expenses.
Okay.
You're gonna have to go to your oil change and get me that receipt and give me your parking receipts. And at the end of the day, when you compare both methods, usually it's beneficial to do the standard mileage.
Okay.
So that's what I normally do.
That's what I think my account usually does the same thing too.
Probably.
Just to keep it simple.
Yeah.
All right. Yo, man, I appreciate you coming through, bro. It's your first podcast.
Yeah, hey, I'm excited.
He was a natural at it, right?
Thank you so much for the opportunity.
Of course, bro. Of course.
It's great.
Give me your contact information again, just in case you didn't get it the first time.
Yeah.
Make sure you guys like, subscribe, hit the notification button, give me a comment, give me a thumbs up, all that good stuff.
Yeah. Cell phones 516-662-6132, and I'm at that flipping accountant on Instagram.
Yeah. So if you see this guy that's knocking on your door, you may need a little work on the property, right?
Hey, if your taxes aren't low, I want to know.
My man, I appreciate you, bro.
Hey, man, thanks a lot, brother.
Yes, sir.